Hey everyone, Ellis Hammond here, Vice President of Capital at Aspen Funds, and excited to share a massive update. In this week's episode, Aspen Funds has reached over $300 million in retail capital since the inception of this company. Of course, a lot of that was raised well before I got here, but really excited about the progress that we're making. And what I'm going to do in this episode is just talk about the progress that we've made this year, the exact amount of money that we've raised, where that money breaks down. We also tried some new things this quarter in Q3 in terms of marketing and where we're starting to spend money, and have had some great results and has some so-so results. And so I want to share exactly what's working, what's not working for you and helping you grow your capital raising business. And then lastly, there is a brand new attribution source, kind of like Facebook was 15 years ago, Google SEO. There is a brand new attribution source that is working for us that we got new leads in for free this week that I want to dive into. And so let's get in. 300 million mark is pretty cool. For 2025, though, we are at now $94.1 million as of today. Today is September 12th when I'm recording this, and on pace to break $100 million in terms of money raised in 2025. Really, by the end of Q3, we should be at that. And so that's pretty exciting to kind of break that down where that is. I've talked about this on previous episodes, but again, we've raised over $45 million for our oil and gas upstream energy fund. This is a kind of a high yield investment offering that focuses on, both production and, existing production and drilling opportunities. And so it's been a very exciting opportunity for us. This is our second fund with this current sponsor, and it has done very well. We have raised over $23.5 million in kind of the debt and private credit category. So really think about kind of consistent income has definitely been a staple for us. Over $9 million in industrial across a couple different deals, and then a little bit over $16 million in multifamily is the breakdown of that. Again, to reiterate why I think it's so important, I mentioned this on other episodes, but I think the reason, again, I share those numbers with you, especially as a capital raiser, is just to see like how important it is to have, what we've realized in the growth of Aspen Funds is not just having one offering, is that when you have multiple offerings, you're able to get multiple investments from the same investor. And so this continues to fuel our growth is, again, if you would say, hey, we're just an industrial firm, well, we've only raised 9 million this year. You'd say it's been a tough year, right? Or just in multifamily, we're not doing many deals, but because we've positioned ourselves as an alternative investment firm, again, not only does that, allow us to be broader, but it allows us to have multiple offerings. And that has been a huge part of our success over the last several years, is really shifting from kind of a distressed, residential mortgage note company to an alternative investment firm, and being able to provide quality, top tier assets based on macroeconomic trends and not just a single vertical. Okay, so let's talk about, what we've been doing in Q3. I mentioned that we started, spending money in different ways. And so the thing that we tried differently this quarter, and if you've been listening to me for any time, we've done a lot of things. In fact, probably the main way we've spent money in acquiring new investors, meaning they didn't know Aspen before, they weren't Aspen investors before, is been Facebook ads. And, I think Facebook ads is still a great place to acquire new investors. But what I've noticed about Facebook over the last year now, it's been about, just over a year that we've been spending money on Facebook, is that even though it's a good way to acquire, efficiently acquire leads, the sales cycle is much longer. And the reason that is because what I've noticed is that, with anything, that it just takes a long time to build trust. And, especially if you're going out on Facebook, this is an investor that's never heard of you or your brand. They don't know you. And, not only are they seeing your ad or submitting their information to you, but they're submitting their information to 10 or 12 other investment firms. And so the sales cycle has just been a lot longer. And so the velocity, meaning that we're putting money into the Facebook machine and getting money out by a new investor, has just been really slow. And so I wanted to start testing other things. And so the thing that we did this quarter was we actually we sponsored a newsletter. And I've never done newsletter promotions. And so this was the first time that we've done this. I started kind of, I subscribed to a lot of stuff and just kind of see what's working. I started noticing some of our other peers, competitors sponsoring this newsletter. And just like in anything, just because I saw them doing it, I didn't just jump in and say, oh, if they're doing it, I'm going to do it. What I started doing is I started following these newsletters. And here's I would say a tip for anyone in marketing is pay attention to what someone does over and over again. And so as I started following these newsletters, I started to see some of the same groups sponsoring particular newsletters over and over again, like over the period of multiple quarters. And so here's what I know. If someone is spending money over multiple quarters, or you see the same Facebook ad popping up multiple quarters, or they've been running the same Facebook ad for over a year, guess what that means? It's probably working. And so we decided to jump into the newsletter promotion, media strategy. And we, out of the 46 new investors we've gotten this quarter, 10 of those have come from one newsletter, which I think is tremendous growth when you think about what we're willing to pay for a new investor and what we spent to promote on this newsletter. This is an outsized return for us from a media standpoint. So let's talk about what we did right. I'm going to also talk about what we did wrong, because there's several things, but let's talk about what we did right. And if you're going to think about doing a strategy like this, let me back up and say the one of the main reasons why I think this went well, especially for the newsletter that hit, is that we already had some brand recognition and brand trust with this audience. And so this was a newsletter that we've actually sponsored this kind of website before. And so they knew our name from that. It wasn't brand new. We had done a webinar with them in the past. This audience also, I would say, kind of runs in similar circles. And so, a lot of the same investors would maybe go to a lot of the conferences in which we've spoken on in the past. And so a lot of people in this community would have heard about Aspen Funds. So I think that has a lot to do with this success, is that there was already some shared interest, there was some shared recognition, there was some brand trust. And, it probably wasn't hard to, say, hey, who's heard about Aspen Funds, and to get some positive review. And so I don't want to underestimate the power of that already. But there were a few kind of tactical things I want to go over that I think will be important to note as well, so that you can replicate some of our strategy if you're going to go do something like this. The first thing is that we built a separate landing page to track attribution. So the reason this was important is, when someone were to click on that newsletter, you got to give them an easy next step. And so I always think, like, what is the most easy thing that you can give them to kind of take the next step in the investment process? And so what we did was we built a separate landing page that just said, hey, what I know that you want. If I want to look at the opportunity, I don't want to necessarily get on the phone with you right away. What I want to do is I just want to look at the deck. I want to look at the materials. That's exactly what we provided. A landing page that they could submit their email and get the investment information immediately. And what that also allowed us to do was track attribution. So as soon as they submitted that, our CRM said, hey, this person came from this website. And I'll tell you why that's important in a minute. And then immediately after that, our team would get a notification. Hey, John Doe just submitted their information about this investment opportunity from this newsletter. And so our team knows that as soon as that comes in, we need to try and follow with that lead. If within, like, immediately, as soon as we see that, unless you're on a phone call with someone, you should drop what you're doing and follow up with that person. Right. And the reason that's so important is, in this industry, I find that the differentiation is not necessarily going to happen from the investment product standpoint. It is going to happen from the service standpoint, right? Because if someone's submitting their information to your firm, it's likely they're also submitting their information to other firms, meaning they're not just an investor looking for one deal, they're looking for multiple deals. And likely, for example, in oil and gas, if they're looking at oil and gas offerings, you're not the only one. And so how do you differentiate yourself? Well, it's hard to necessarily differentiate yourself from a return standpoint if you're offering the same deal, but you can differentiate yourself by being quick to call, by following up, by providing great communication. And so this is so key. And what I found, it's typically not, this is so key. It's typically not the best investment that wins, meaning the best investment often doesn't get, the most amount of investors. It's who has a captive audience, who's able to get attention and keep the attention long enough until that investor is ready to invest. And then, once, let's say we didn't get them on the phone, we had automations to send the information and then allow them to book a call if they wanted to book that on their own. And so that allowed, a continuous drip of saying, hey, we're here. If you'd like to chat with us, we gave them some more information about the deal. And again, this worked really, really well. The other thing that I would note is every call took, in most cases, a follow-up call. So there's two things there. I've shared this in the past. Out of the $94 million that we raised so far this year, probably half of that is new investor capital. Every single one of those investors took a phone call. And in this case, almost every single one of these new investors took a follow-up call. And so again, this is such a key part of this business is it just takes time and trust to build this relationship. And if someone's coming in, it's typically not going to be, hey, here's the investment deck, here's a phone call, invest with us. You really need to take time to invest in a relationship. And I train our team to say that first call is not about pitching a deal. In fact, I'd rather you say nothing about the opportunity in that first call and only make it about the investor. Now, that's not always the case. And some investors are ready to kind of dive into the deal because they've done a lot of due diligence and research already. But the first call is about really building traction with the investor. And again, you want to seem credible, and the best way to do that is not by talking a lot. The best way by doing that is asking a lot of questions, and that way you can best understand how to, guide them and direct them in the next steps. Let me just go back. One thing I'll say before I move on to what's not working, because I said, we built a separate landing page to track attribution. There was a couple of things we did there that I think are so key as you grow and scale your capital raising business. And the reason we track attribution is at the end of the day, like this is a numbers game. And the reason that we were able to, I wouldn't say move on from Facebook, but the reason that I decided to move dollars away from our Facebook strategy and into newsletters is because I've been tracking the data every single week, every single month, every single quarter. And I know how much money we've raised. I know how many investors have funded. I know the dollar amount. I know our cost of capital, and I know our sales cycle. And as I said, like it wasn't working. Like it was time to kind of test other things. And to be able to go back and make decisions based on data and not feeling is so key. And you don't have to have like a sophisticated CRM to do this. Like with our Facebook data, I track it in an Excel spreadsheet, right? Like how much did we spend this week? How many leads came in? What was the cost of those leads? How many of those leads invested, right? And so that is so key when it comes to attribution and being able to make informed decisions on your marketing dollars and keeping cost of capital efficient and as small as possible. And it's so key. The other thing on that landing page is we actually branded it, the name, like we actually had the name of the newsletter. And that way when someone came in, they knew that they were, I don't want to say they knew that they were welcome, but it felt comfortable, right? They were already a newsletter reader. And so coming and seeing that newsletter's name, maybe even a photo, it just, again, I think you're leveraging the someone else's brand trust for your own offering was really key. Okay, so let's talk about what didn't go well, because this quarter we not only sponsored one, which did really well, I actually sponsored 3 different newsletters. And one of the newsletters we haven't gotten any results from. I shouldn't say any, we've gotten leads, but no one has invested. And I want to kind of dive into why I think that is the case. Even though it has only been just over a month, I still think I have a good idea of why. And the biggest thing is it just takes time to build trust with an audience. This was a brand new audience. It's an audience that we had never spent money with. It was a bigger, larger kind of newsletter that I found. I actually really enjoyed reading the newsletter. And I was like, man, this is a very valuable newsletter. If I'm opening up and reading this, I would think people like me are probably also enjoying and reading this newsletter. Let's try sponsoring it. And I did see some other people doing it. And I would just say, like, it with anything in any new, medium, it takes time to build trust. And so I think that's part of it. I think this audience is more skeptical. And the reason is because they think they know more. And the reason I know that is this is an audience just for commercial real estate professionals. And regardless if they know more or not, because they're in this industry, and they think they know a lot more. And so skepticism always creates hesitation. And so that is going to take some time to kind of overcome the skepticism with anything. I also say the sales cycle in most cases is going to be 5 to 6 months for a brand new investor. You can, of course, shorten that. We did shorten that in this first newsletter, again, because I think we already had established some of the trust. But with this, we're new and it's early innings. And so I think we just need to be patient. I will probably spend money again before we even see a lot of results, because I know like this is a pretty large audience. And if we can build brand trust and brand recognition, I think we'll do really well over a long enough period of time with this new audience. Okay, the last thing I want to talk about is a really exciting update, because we have a brand new attribution source. Not just us. I'm talking about like planet Earth, meaning I think for the first time in a decade, there is a new place to get leads that did not exist before. And that source is ChatGPT. So for the first time this week, we had 2 different investors come in from searching in ChatGPT, which this is amazing. Like we didn't pay for these leads. AI is essentially scraping the data online to provide the best search results. And so the truth is I don't have great feedback on how that happened. In fact, I asked one of the investors to provide us the prompts that they gave ChatGPT, and I used those same prompts today and did not get Aspen Funds as the result. So I don't quite yet have the tactical information on how to show up on ChatGPT, but I think it's worth considering kind of the changes that are happening online and what this means for any business, but especially for capital raisers, is that people are now searching and asking ChatGPT, not just Google, for business recommendations. And there's a couple of things here. I think one is it's not just a 3 or 4 kind of keyword. It is they're asking a long question, like long form questions on where to find good investment opportunities. Like the prompts were not 3 or 4 words. These were several sentences of what they were looking for. And so I think that is really, really key. The other thing that is worth noting as we move into this AI world is that, in the past, like keywords were important, right? And not that I don't think they're important today, but with the amount of content that is being produced or able to produce, consider this for a moment, right? Like a robot can create 1 billion pieces of content, meaning I don't think the future of the internet is all about creating content, right? Where in the past, content was king in the traditional Google days. Why? Because of SEO, because of keywords. But in today's world online, like anyone can create content. You don't have to be a person to create content anymore, right? Like you can get AI to create dozens and dozens of articles for you at any point. And so when ChatGPT is now doing the search to find you, they know this, like they're able to see this. And so what is going to differentiate you online? And here's what I think is different for Aspen and why one of the reasons I think we've showed up. Yes, we have good content. We have a lot of content in a lot of places, but for the last 4 quarters, I've been telling our team, get Google reviews, get Google reviews. And we went from having 0 to the beginning of this year to having over 100 today on our Google account, 5-star Google reviews. And the reason this is so key is I think we're moving away from content is king to third-party validation is king. And why? Because AI is now looking, and I think the way that they're verifying who are the best is not who has the best content. I think is who are the other people saying has the best content, or what are other people saying are the best recommendations. It's not just what you're saying. What are other people saying about you? And Google reviews is like, what is a better index for third-party validation than your Google reviews, right? And so that's why we continue to put a massive focus on Google reviews. But it's not just Google reviews. I think there are other ways to get third-party validation. For example, if you're a podcast guest on someone's show and you have your website on their podcast notes, that's a way to get third-party validation. If you're a guest blogger, or maybe you get you get someone to blog about your company, that's third-party validation. Aspen Funds was on the Inc. 5000 list this year, top 250. So now we're on the Inc. 500, Inc. 5000 website on our website, right? So third-party validation is going to be so key because like we're moving to the air, like in an era where I think really like someone's not just going to sit down and type in Google. They're going to say, hey, Alexa, hey, Siri, hey, Grok, whoever, right? Whoever's going to win out in terms of names, I'm looking for this, help me find this. I do this all the time, right? With restaurants with, hey, what should, give me a good date idea. And instead of typing all this, because it's a lot to type, like I want to give it more detail. Here's what we're looking for. We're looking for a restaurant with a good wine menu or whatever it might be. You don't want to type all that. You want to speak that. And so where is that content going to come from? It's not content anymore. It's third-party validation. And this is, I think it's revolutionary is my point. And so if you're not taking serious kind of how you're showing up online and how many other places you're showing up online other than just your website, yeah, I think you're you're missing out is the point. So I'm excited to kind of dive into this more and learn more about how ChatGPT is working and showing Aspen Funds. And as I learn more, I'll be sure to share. Okay, last thing I'll share here. I know I said last thing twice, but this is last. The best acquisition in my world was in the last 3 weeks, my wife delivered our healthy baby girl. So that's why I didn't post for the last 2 weeks. I was in full-time dad mode. And so our third child is born and very excited about that. Healthy mama, healthy baby. And so we are blessed. Hey, keep following along. I would love to hear your questions. You can send those to ellis@aspenfunds.us. Happy to address those here on the podcast, or you can follow me on X. My DMs are open and would love to hear from you. And if you are interested in becoming a fund manager partner with Aspen Funds, you're looking for a credible partner and sponsor to, as you saw earlier, like the more deal flow you have, the more type of offerings you have, the more money you likely raise. And so if you're looking for, more deals to do, you have the ability to raise at least $1 million or more. We would love to speak with you and see if it's a good fit. aspenfunds.us/fund manager. There is an application there. It'll take you a few minutes. And then the next step would be to get on a call with our team so that we can really see if it's a good fit. So aspenfunds.us/fund manager. Thanks, everybody.